Cathie Wood, the CEO of ARK Invest, is known for her bold predictions. Her insights and forecasts have often stirred the financial world, making her a prominent figure in the investment community. With a keen eye for disruptive technologies and a deep understanding of market dynamics, Wood has built a reputation for thinking ahead of the curve. One of her most audacious predictions is that Bitcoin will hit $1.5 million by 2030. This forecast has captured the attention of both enthusiasts and skeptics alike. The cryptocurrency market is no stranger to volatility, and such a prediction raises many questions about its feasibility. Currently, Bitcoin's price is far from that lofty target. As of now, it hovers around a fraction of that value. The journey from its current price to $1.5 million would require unprecedented growth and adoption. Is Cathie Wood's prediction grounded in reality? Or is it an overly optimistic vision of the future? Let's dive deep and explore the potential and risks of Bitcoin. Understanding the factors that could drive such exponential growth is crucial. Bitcoin's decentralized nature, limited supply, and increasing acceptance as a store of value are often cited as key drivers. However, these factors alone may not be sufficient to propel it to such heights. This essay will analyze Wood's reasoning and examine the factors influencing Bitcoin's future. We'll look at the technological advancements, market trends, and macroeconomic conditions that could play a role. Additionally, we'll consider the impact of institutional adoption and the role of Bitcoin in the broader financial ecosystem. We'll delve into the potential drivers of growth, such as adoption and its role as an inflation hedge. As more people and institutions begin to see Bitcoin as a viable alternative to traditional currencies, its demand could skyrocket. The idea of Bitcoin as a hedge against inflation is particularly compelling in times of economic uncertainty. We'll also address the risks, including volatility and regulatory uncertainty. The cryptocurrency market is notoriously volatile, with prices capable of swinging dramatically in short periods. Regulatory actions by governments around the world could also have significant impacts, either fostering growth or stifling it. By the end, you'll have a clearer picture of whether Bitcoin at 1.5 million is a real possibility or just a distant dream. We'll weigh the evidence, consider expert opinions, and explore various scenarios. Whether you're a seasoned investor or a curious observer, this analysis aims to provide a comprehensive understanding of the future potential of Bitcoin. Cathie Wood's bold prediction is more than just a number. It's a vision of a future where digital currencies play a central role in the global economy. Her confidence in Bitcoin's potential reflects a broader belief in the transformative power of blockchain technology. As we navigate through this analysis, keep in mind the broader implications of such a shift and what it could mean for the financial landscape as a whole. The path to $1.5 million is fraught with challenges, but also filled with opportunities. From technological innovations to shifts in public perception, many factors will influence Bitcoin's trajectory. As we explore these elements, consider how they align with Cathie Wood's vision and what it would take for her prediction to come true. In conclusion, Cathie Wood's prediction is a bold statement that invites us to think about the future of money and the role of cryptocurrencies. Whether or not Bitcoin reaches $1.5 million by 2030, the journey itself will undoubtedly reshape the financial world. Stay tuned as we delve deeper into this fascinating topic and uncover the possibilities that lie ahead. Cathie Wood argues that regulatory clarity is crucial for Bitcoin's growth. She believes that clear guidelines from governments will encourage institutional investment. This influx of capital could propel Bitcoin's price upwards. However, regulatory clarity is a double-edged sword. While it can foster trust and adoption, it also brings the potential for restrictions. Governments may impose rules that stifle innovation and limit Bitcoin's use. The future of Bitcoin hinges on finding a balance between fostering innovation and protecting investors. Advocates argue that Bitcoin is a safe haven asset, similar to gold. They believe that Bitcoin, with its unique properties, can offer a hedge against economic instability and financial crises. Just like gold, Bitcoin is often seen as a store of value, a way to preserve wealth when traditional financial systems are under stress. They point to its limited supply and decentralized nature as protection against inflation. Bitcoin's supply is capped at 21 million coins, which means it cannot be devalued by inflation in the same way that fiat currencies can be. This scarcity is a key factor in its appeal as a safe haven asset. Additionally, Bitcoin operates on a decentralized network, which means it is not controlled by any single entity, making it resistant to government interference and manipulation. In times of economic turmoil, Bitcoin's value could surge as investors seek refuge from traditional markets. When stock markets are volatile and currencies are devaluing, investors often look for alternative assets to protect their wealth. Bitcoin, with its digital nature and global accessibility, becomes an attractive option. During economic downturns, we have seen increased interest and investment in Bitcoin as people look for ways to safeguard their assets. However, Bitcoin's volatility raises questions about its safe haven status. Unlike gold, which has a long history of stability, Bitcoin's price can be highly unpredictable. It is not uncommon to see significant price swings within short periods, which can be unsettling for investors looking for a stable store of value. This volatility can be attributed to various factors, including market speculation, regulatory news, and technological developments. Its price swings can be dramatic, making it a risky investment for those seeking stability. While some investors are drawn to Bitcoin's potential for high returns, others are wary of its unpredictable nature. The dramatic rise and fall in Bitcoin's price can lead to significant gains but also substantial losses. This risk factor is a major consideration for anyone thinking of investing in Bitcoin as a safe haven asset. Whether Bitcoin can truly serve as a safe haven asset remains to be seen. The debate continues among financial experts and investors. Some believe that as Bitcoin matures and becomes more widely accepted, its volatility will decrease, making it a more reliable store of value. Others argue that its inherent characteristics will always make it a risky investment. The future of Bitcoin as a safe haven asset is still uncertain, and only time will tell if it can fulfill this role. Its success depends on its ability to maintain value during periods of economic uncertainty. For Bitcoin to be considered a true safe haven asset, it must demonstrate resilience in the face of economic challenges. Investors will be closely watching how Bitcoin performs during future financial crises and periods of economic instability. If it can maintain or increase its value during these times, it may solidify its status as a safe haven asset. Until then, the debate over Bitcoin's role in the financial world will continue. Section 4. The potential and perils of adoption. Widespread adoption is crucial for Bitcoin to reach $1.5 million. This means that not only individual investors but also large corporations and financial institutions need to embrace Bitcoin as a viable asset. The more entities that adopt Bitcoin, the more its value is likely to increase. If major companies and institutions integrate Bitcoin into their operations, demand will soar. Imagine a world where companies like Amazon, Apple, or even smaller enterprises start accepting Bitcoin for transactions. This would create a ripple effect, encouraging other businesses to follow suit. This increased demand could drive the price up significantly. As more people and businesses buy Bitcoin, the limited supply will make each Bitcoin more valuable. This scarcity, combined with high demand, is a recipe for substantial price increases. However, mainstream adoption also presents challenges. One of the biggest hurdles is educating the public about how Bitcoin works and why it can be beneficial. Many people are still skeptical or unaware of the potential advantages of using Bitcoin. Scalability issues such as slow transaction speeds need to be addressed. The current infrastructure of Bitcoin can handle only a limited number of transactions per second, which is far less than traditional payment systems like Visa or MasterCard. This limitation could hinder its widespread adoption. Furthermore, user-friendly platforms are essential for mass adoption. If people find it difficult to use Bitcoin, they are less likely to adopt it. Therefore, developing intuitive and accessible platforms is crucial for Bitcoin's future. The future of Bitcoin depends on its ability to overcome these challenges and become a seamless part of everyday life. This means not only improving the technology but also building trust and understanding among the general public. If these hurdles can be overcome, Bitcoin has the potential to revolutionize the financial world and become a mainstream form of currency. Section 5. Navigating Bitcoin's price volatility. Bitcoin is notorious for its price volatility. Its value can fluctuate wildly in short periods, making it a risky investment for the faint of heart. This volatility stems from various factors, including market sentiment, news events, and regulatory developments. While volatility creates opportunities for profit, it also exposes investors to significant losses. It's crucial to understand and manage this volatility before investing in Bitcoin. Diversification and risk management strategies are essential for navigating Bitcoin's unpredictable price swings. Section 6. The looming threat of regulation. The regulatory landscape for cryptocurrencies remains uncertain. Governments worldwide are grappling with how to regulate this emerging asset class. While some countries embrace Bitcoin, others are imposing restrictions or outright bans. This uncertainty creates a significant risk for Bitcoin investors. Unfavorable regulations could stifle innovation and hinder Bitcoin's growth potential. It's crucial to stay informed about regulatory developments and their potential impact on Bitcoin. The future of Bitcoin depends on navigating this complex and evolving regulatory landscape. Section 7. Bitcoin versus altcoins, a battle for supremacy. Bitcoin is not the only cryptocurrency in the market. Thousands of altcoins or alternative cryptocurrencies are vying for attention and investment. Some altcoins offer unique features and functionalities that Bitcoin lacks. This competition poses a challenge to Bitcoin's dominance. If an altcoin gains widespread adoption and surpasses Bitcoin in terms of technology or functionality, it could erode Bitcoin's value proposition. Bitcoin must continue to innovate and adapt to maintain